Want to join now into the company. Liz McDonald, Ashley Webster, Scott Martin, Jeff Sika is with us. It's a huge week for your money. 140 S&P companies are reporting. You've got the Federal Reserve, which more than likely will hike interest rates. And then on Friday, we've got the jobs report. So, Scott, I want to start with you because even tomorrow we get income and spending. Remember, that GDP number powered by a robust, confident, strong consumer. So can that continue?
Yeah, it can. Charles, strong consumer and strong business confidence, too, which, we're seeing show up in those GDP numbers via CapEx, which was dormant for many, many years recently. So that was great to see come back. It is a big week. To me, it's the crown jewel, which is the granddaddy, which is the non-farm payrolls report on Friday. Why? Because that should dovetail what was a really good GDP report we saw last week, both on overall job growth above 200,000 and also hopefully a rebirth of some earnings growth. Remember, last month we didn't see any average hourly earnings growth. It was stuck at 2.7%. I'm looking that to kick up closer to 3%.
Although, Jeff, if that happens, that brings the Fed back into play, right? Remember, a lot of people don't remember this market really, the biggest hits to this market have been the yield curve first the 10-year going to 3%. That hurt the market. Then the inverted yield curve. But the first real big hit this year came on February 2nd. Dow off 666 points after we found out median wages increased 2.9% year over year. So while we all want wages to go up, and anecdotally we've been expecting it for a long time, would it be detrimental to the market?
No, I think it would be very good for the market if wages go up. But
so if we saw like a three handle, 3.0% median wage growth year over year, you think the market would take that in stride?
I think it'll take it in stride. I think it's grown to expect it. But what I really think the market is focused on right now is earnings have been great, the economic numbers have been great, but what I'm looking at is the forward projections. I'm looking at what the CEOs say and what these companies are doing in order to protect themselves from the effects of tariffs. I don't believe that the consumer is going to come out of this war, this trade war, unscathed. I think the consumer is going to eventually be affected by that.
I think if we saw, sorry, I just want to say, if we saw 3% gain, though, Jeff, I think the market would say, Fed's going to jump in because of the Goldilocks scenario we've had with the hot economy. With the wage growth and inflation, I think that's when the Fed would say, wait a minute.
The Fed's already raising, guys.
Right, when the market went down.
No, well, we know the Fed's going to raise those, Scott, but I guess the question is,
how many times?
How many times? What do you think, Scott? If we had a 3-handle or more on year-over-year median wage increases for on Friday, what would the impact be to the stock market?
I think it would take it in stride, like Jeff said, because I think the Fed rate hike guys are already baked in. I mean, I think we've got at least one more and probably two if you look at the Fed fund futures, which have been creeping up here and there for the December meeting. So to me, the market wants to see this now. It's almost like if we don't get it, that may be the real issue here because the Fed has already said, look, we're watching the inflation numbers, we're watching the economic data, and that backs up what they're doing.
All right. Now, so far, the names that we've had, 285 S&P names have reported. And, Jeff, to get to your point, FactSet did a piece on impacts of tariffs. Just mentioned in the conference calls, 149 conference calls, 70 times it was mentioned. What I thought was interesting, though, is 43 times they said there was no impact for this quarter or future quarters. 19% said there was a modest negative impact. That's a relatively small number. I mean, there are specific industries, obviously, like lumber and Lennar and some other names. But beyond that, do you think it could be a problem for companies that aren't specifically hit by higher aluminum cost?
I think it's very hard when you look at how these companies are structured for basic material costs increasing for them not to be affected. I found that report to be very deceptive. I think the consumer will be affected. We're seeing increases in a lot of the basic material companies, and for the consumer, for those increases not to affect the consumer, I think is a little bit of a false illusion.
All right, so we're in the midst of earnings season. Remember, another big hit the market took early this year when Caterpillar's CFO said on a conference call that she said it was a high watermark. The market fell apart. Obviously, she was wrong. It wasn't a high watermark.
They've said that in this quarter for the last 20 years. It always is the high watermark that quarter for Caterpillar, usually traditionally.
The interpretation from Wall Street, though, is that was it. It won't get any better than that.
What I see, and being in the development world myself, I see what Caterpillar is saying. The increase in steel, aluminum, light fixtures, HVAC, all the things that prevent people from taking on these bigger projects that Caterpillar relies on is a very strong concern.
We have a dearth of workers to take on those projects. We keep hearing from businesses they need to hire workers because there's a building boom going on. Now, if companies are doing this in advance of rate hikes, meaning they're borrowing to build out and CapEx is going up, that's another thing. But it looks like we're in the middle of a building boom. And the president got, watch this, for the first time in decades, he got the EU to say, you know what? There is wrongful technology transfers to state-owned enterprises. That's a problem. And you know what? The tariffs thing, I think he's using it as a big stick, and he's got a carrot behind the scenes. He wants fair trade. He could pull back on those tariffs if he sees the market goes down. That's his trump card.
I still feel like the trade issue is still looming. To Jeff's point, it will eventually work its way through, and ultimately consumers will pay more. But the bigger fear on the earnings issue is I think the first and second quarters have been terrific. To Caterpillar's point, and to others such as yours, can this continue into the third and fourth quarter?
Well, even Caterpillar, though, this morning, they raised their own projections for the rest of the year. They were at $11.25. They went to $12. By the way, the operating margins, which were under 8%
margins
when Trump came in, are going to be 17%. That's mind-boggling. I focus on operating margins as one of my biggest guides for investing. So, I mean, yeah, there's always what, could, maybe, might. But I'm talking when the management goes out there and says, hey, we are going to lift our guidance for the rest of the year, I think it's huge. In fact, you know, it's what people generally base their investments on.
I honestly think a lot of these companies are going to come back and change what they said, because I'm talking to a lot of people every day that have big projects, and what they're saying is they can't believe how much basic
on the GDP report, the final sales number was 5%. Consumer spending was through the roof. You think all of that comes to an abrupt halt? You think a person who just got a job and just got a raise is not going to go out there and spend that money?
This is what I believe. If they don't find a way to hedge off these tariffs, we will see the consumer has peaked. I think the consumer has done great from the tax cuts. These tariffs will hurt them in a big way, and something needs to change with the tariffs, or there's going to be a problem.
Let's take a look at Facebook, folks. That was the big news last week at that huge sell-off. Barron says now that the stock is where it is, it's a bargain. Jeff, do you agree?
I love Facebook. I've loved it for a long time, but I was a little bit disappointed it didn't fall more. I think it has a
wait.
Yeah, I think well, I think when this stock gets down to this 168, 165 to 168 range, it's very, very attractive.
Quickly, the value proposition. Why would someone go in there and buy a company whose monthly average user growth has stalled dramatically, could be facing tremendous headwinds? I mean, you're worried about tariffs hitting consumers, but what about the things that are facing Facebook? Because they're facing some serious regulatory issues on both sides of the Atlantic, and their core businesses are stalling.
Right. Well, they are facing regulatory issues. They are facing a slowdown. But what I see with Facebook is they've been able to innovate consistently. And I believe that they will innovate their way out of this slowdown. I think if people own Facebook, they shouldn't be selling it, and they should be really anticipating a better price in the 160 range. And I think
Instagram
and Instagram is picked up steam, and I think they should. I think
Scott,
there'll be more momentum.
You know, maybe they've been able to innovate, or maybe they've made some smart acquisitions. Either way, they've been able to stay ahead of the curve. But, you know, to guess that they're going to always be able to make smart acquisitions may not work out.
No, it may not, but they're going to try. And I mean, like anything, you know, Charles, there's companies that make good purchases and bad ones, but you got to take the good with the bad. But Instagram was certainly a great acquisition, and the AR/VR stuff that they're doing, which both of those last two things, boys and girls, they have not monetized yet. So that to me gets me aligned with Jeff here, where if this thing drops back in the low 160s, which is where it traded overnight after that terrible earnings report, you've got to run with both hands and pick it up.
There's a proposal in the UK now to treat Facebook the same way it would a broadcaster. In other words, it would be their version of the FCC now takes over in regulation because of what they perceive as fake news. That is a huge step.
Yeah, by the way,
that's crazy.
For Scott, AR, VR, augmented reality, virtual reality. I will say that the hottest name in augmented reality, Blue Magic, just did a display a week ago, and it wasn't that great. I happen to think AR could be huge, but it might be early to live up to the hype. We'll see. All right, let's take a look at CBS, folks. We know there are allegations of sexual harassment now against CEO Les Moonves. The Wall Street Journal is reporting that the board discussing whether he should step aside. Scott, the shares took a hit on Friday. Would you be looking to buy this on this situation right now?
Not yet, Charles. You know, this onion still has to be unpeeled, in my opinion. You got to look at the culture at CBS, see who else is maybe complicit in some of this behavior. You know, the problem with this issue is it goes back almost 20-plus years. So you've got a lot of investigating to go through and a lot of things to kind of uncover. So to me, I'd wait and see on how the stock trades over the next few days as more evidence comes out before I take a bite.
Yeah, you got to watch the odds of whether or not the Redstones get what they want. A remerger of CBS and Viacom.
Yeah, they got a better chance now than they did a couple days ago. Thank you all very much, especially Scott and Jeff. Appreciate it, guys.